Hey, Dennis Mattern here with Right on the Money. We are out on location at a major conference. Can't name it for trademark reasons, but I am joined by two awesome guests, Terry DuPont, Becky Swansburg. Now, we've been talking about taxation. We've been talking about where things are going to go. What I want to ask you about now, Terry, especially, is you all have worked together on a book. Tell us about this book.
Yeah, it covers all the risk that you might run across in retirement. And there's more than you think. And in my mind, taxes are one of the largest, biggest risks. Yeah. But it leads you down the path to protect your money and mitigate the taxes in your retirement going forward.
Do you feel like when somebody comes into your office to meet you for the first time and you're having the initial conversations, how well prepared do you think they are when it comes to the thought of taxes in retirement? And how knowledgeable? Are they just blindsided or?
I think it goes both ways. It depends on the person, typically, but most of the ones that come into our office are not, because they've read the book first, because we sent them a complimentary copy.
Well, that's really the idea that we kicked off this whole segment with, which is, if your retirement approach is only focused on mitigating market risk and mitigating income risk, it's not that it's a wrong approach, it's just not a complete approach. And so what I love, Terry, that you do with the clients you work with is really make sure that we also are mitigating tax risk and legislative risk as best we can.
When it comes to mitigating the rest of the risk, talk a little bit about how you work with clients and prospects, how you help people that way, because that's
right.
Fascinating.
Well, I think first of all, it's important to know what your potential tax liability is on your retirement accounts. And so with Stonewood, we have the total tax burden analysis summary or analysis. And so we take a couple's retirement accounts, qualified retirement accounts, put them in there, project it out through up age 90 or the rest of their life, and show them realistically what the range might be on the potential taxation of the retirement accounts. And quite frankly, it's a lot more than they ever thought.
Now you literally just have to have people that you must just literally see them sit back in their chair and say, whoa.
Oh my God, yeah, they're dumbfounded, so to speak. And then they definitely want to know how we can mitigate that, and that's what we help them do.
Now, Becky, with your expertise, when you talk legislative risk and the different things facing retirement, it's easy to almost feel like a helpless feeling, because we're just the little guy. But it's great. This book does an amazing job of laying out the different things you can do. Tell us a little bit about how you put this all together.
Well, it's the exact same way that we really plan for retirement in all of the other facets in terms of risk. So if you have, money in a retirement account, probably it's not 100% equities exposed and all super risky, right? We've mitigated some of that risk through diversification. It's the exact same with taxes. Most savers, when they look at their retirement assets, realize that they are extremely overexposed in these tax-deferred vehicles. And there's nothing wrong with tax-deferred vehicles, but if all or the majority of your retirement funds are in them, then you don't have any hedge against rising taxes and this tax risk. So I know what Terry and his team really help with is making sure that we've diversified when it comes to tax status of retirement funds, the same way that we would diversify in terms of market and in terms of guaranteed income and any other facet of good retirement strategy.
We're talking 401k.
Yeah.
We're talking IRAs, and that's the 401k is where most people are going to be, unless they're in maybe a government.
TSPs like I had in the government.
Yeah. So that has really got to be a shocking.
thing. Yeah, they never imagined the taxes were that high. Most of them know there's going to be taxes on their retirement accounts, but they never knew what it was going to look like over their lifetime.
Well, let me ask you that. A question that just popped into my head is, most people, I bet, are under the assumption that their taxes will be lower when they retire, and I think most people have banked on that, haven't they? Like, well, I'm not going to be working, so it's going to be.
That's what they've been told.
Yeah.
Okay, so they believed it. They've been told
this
for
tax deferred saving is built on that. That idea.
That's the commercial for 401k plans back in the 70s, right? However, what I have found in the 43 years of business, being in this business, that the only people I've seen that had lower taxes in retirement were those that chose to have a lower lifestyle. And who wants to lower their lifestyle in retirement?
I don't. I don't
either.
So you have the ways and the means, little Washington Capitol Hill there. But you have the ways and the ability with that analysis to take a look and start laying out a plan.
Oh, absolutely. Yeah.
Is it ever too late?
It's never too late, but it's better to start as soon as possible, earlier, because it takes some time to mitigate those future taxes, okay? And so the sooner we get started on it, the easier it is.
Now is the time.
Yeah.
I mean, when we look at the volatility in Washington, when we look at the growing debt and understanding that Congress is focused right now, not just on raising taxes, but on tax policy that impacts retirement accounts, as we've seen with all the legislation through the fall and this spring. Now's the time that if you've been curious about taxes and retirement but haven't pulled the trigger, there's no better time than now.
Also keep in mind that taxes are already scheduled to go up in January 1st of 2026.
That's got to be a shocker to most people.
Yeah, well,
I bet that.
oh yeah, I heard something about that.
Yeah.
But then they don't think about it like we do here in the business. But so taxes are on sale right now. So we can help you do some laddered conversions, et cetera. We have some special conversions. I like to refer to it as a syndicated Roth, because it's much better than a Roth and it gives a lot of other benefits. Yeah.
Coin and phrase, I love it. So Becky, what should people be looking out for when we look at the next year, the next election cycle? Any big predictions you want to make? Anything bold?
Well, I mean, I'd like to divine the future. The only thing I can divine for sure is that tax rates are reverting back to their older, higher rates in 2026 once those Trump tax cuts expire for the artificial rates.
That was already in play. That we're not even talking about raising money, raising tax rates to pay for COVID and all that stuff. We're talking about these tax cuts that are expiring.
Since 2017, we've known that tax rates are reverting back for individuals in 2026. We know that's coming. I think what Terry said is absolutely right. Savers have to ask themselves, are you willing to take a lifestyle cut in retirement to get your tax rate lower? And if the answer is no, now we need to look not just at your tax rates not being lower because of what you need as income, but potentially being higher because what Washington brings.
Yeah.
So with the Build Back Better bill debate, that's a mouthful, we saw a lot of initiatives trying to limit the amount that people can save tax deferred in these accounts and how big those accounts can grow, how big 401ks and IRAs can grow. So I feel that retirement savings has a bit of a bullseye on its back.
Yeah.
We know higher tax rates are coming. We now know it's kind of like a Wizard of Oz moment, right? We pulled back that curtain and now we know where Congress is looking for some of that new tax revenue.
Yeah, golly.
And I think it impacts all of us, and it is perhaps the most important thing in 2022 that people can do to really focus their energy and make sure that they have a strategy that's not going to fail them in retirement.
Yep. And that's why they need to get a copy of the book. It's a great book. It's a great start. And you're willing to have conversations with...
Get the book and get the complimentary total tax burden analysis of your retirement accounts, so you'll know what you're up against.
Terry, always a pleasure. Becky, always a pleasure.
Thank you.
And that's going to do it for today's episode of Right on the Money. We thank you for being here, and we'll talk to you later.